podcast dedicated to the ongoing discovery of how we can all be a part of bigger social change through the lens of the nonprofit sector. I'm your host, Puya Porak. I'm an industrial engineer, nonprofit nerd, and CEO of MatchNice, a social impact tech startup with a mission to connect the nonprofit ecosystem and maximize social impact. Join us on our startup journey as we look to uncover and shake up the status quo in the world of nonprofits. On today's episode, I get to speak with Vivienne Hsu, founder and CEO of Lend Donate, a unique marketplace lending and donation sourcing platform where nonprofits and supporters leverage their collective power for the greater good. We talk about Vivienne's history in the philanthropic space, how she came to launch Lend Donate, how her unique marketplace lending solution works, her journey as a social entrepreneur, the importance of impact. We talk about donor-advised funds and how Vivienne is working to create win-win ROIs for investors and nonprofits. More about Vivienne. She is a social entrepreneur, investment executive, and independent board member with over 20 years of financial services experience. As an expert in her field, she has appeared in numerous interviews on CNBC and Bloomberg TV and is frequently quoted in national publications, including the Wall Street Journal and Kiplinger. Most importantly, she is passionate about strategic philanthropy and sustainable investment. Prior to being a social entrepreneur, Vivienne was the senior vice president at U.S. Trust, where she advised on complex financial matters. She served as vice president of the senior portfolio management at Charles Schwab Investment, where she oversaw its active equity strategies and was the lead portfolio manager for the Schwab Hedged Equity Fund. Under her leadership, the firm launched 3 new funds, which garnered close to $500 million at launch. Prior to that, she was the vice president and portfolio manager at American Century Investments, where she co-managed mutual funds that totaled more than $10 billion. Vivienne received her MBA from the University of California, Berkeley, where she also received an undergraduate degree in applied mathematics. Vivienne is co-chair on the board of Los Altos Mountain View Community Foundation and a member of the board of How Women Lead and Aeris Insights. In 2011 to 2012, she volunteered full-time as a development director at Women's Initiative for Self-Employment, which helped low-income women start and sustain their own businesses. Let's jump right into the conversation. Quick disclaimer, if you're watching this video, you're going to see a picture of me when I'm speaking because I forgot to record this in a gallery view. But without further ado, here is my conversation with Vivienne. Welcome to the Nonprofit Lab, Vivienne. It's so great to have you.
Thank you. So good to be here with you. Thanks for having me.
Well, I wanted to start this episode with the story you told me about your role with Amazon and Amazon Wishlist. Can you share that?
Sure. So it feels like, the summer of 2000 was when I had an internship at Amazon as an MBA student. Just to set the stage, summer of 2000 was kind of like the Amazon started to lose its luster a little bit in the stock market. There's a bit of, kind of doubt. But, it was still a really fun place to be in Seattle. And as an intern, I was there for 7 weeks, and Jeff Bezos held 3 intern lunch, like kind of brown bag lunch to have everybody there. So by the third one, I had already been working there with the product management team in books on various things. And I had an idea I shared. We had a small group meeting. So then at the luncheon afterwards, people lined up to talk to him. And I had the opportunity, I call it my 3-minute of fame, talking to Jeff Bezos one-on-one. And there is where I pitched my idea to him, which was using the wish list that was just coming out, not fully utilized, using the wish list to help schools and classrooms promote their needs. Now, fast forward to current day, 20 plus years later, there are many other platforms that help nonprofit source various needs. But at that time, there wasn't. So my idea was, why don't we have the wish list, run a campaign, promote it with classrooms, with teachers. If they want to say, this year we're reading these 5 books and I need 20 copies of each, and let the book lovers select these items. They'll be shipped directly to the classrooms. Amazon could provide the statement, invoice to show that they paid for it as a donation. So it was kind of like, that was the opportunity I first pitched to a now, of course, at one point, richest man in the world on a donation idea.
That's such a great story. I love that. And Amazon wishlist is such a huge part of how people give to nonprofits. And one of the things I'm really excited about in this interview is exploring what you're doing with Lend Donate, what Lend Donate is. And, I want to get into why you founded it as well. So would you mind sharing your origin story of getting into the nonprofit sector and what Lend Donate is and how you decided to start it?
Of course. Professionally, all my life, my professional background has been in financial services. Most of that time was investment management. So I was a mutual fund portfolio manager, first at American Century Investments and then at Schwab Investment Management. And then I had other various types of like wealth management type of experiences. So thinking about investment products has always been very thing I do all the time. But, along the kind of the same timeline, a parallel life, I did a lot of nonprofit volunteer work. And in the past 15 years or so, I have focused on the fundraising aspects of nonprofit. So as a capital campaign director, as nonprofit boards, of course, and I even took a year off between 2 jobs to be a volunteer full-time development director for a local nonprofit. One day, early in 2015, I got the idea of what became Lend Donate. Now, ideas are a dime a dozen. I tend to have a lot, and I filter a lot of self-censor some of the bad ideas. But this one really caught on from all aspects of good of a fit it is to my experience and knowledge, but also researching the opportunity that it is a much needed space that is underdeveloped. So I quit my job and then eventually, started working on it, turned Lend Donate into what it is today.
What is Lend Donate? Describe
Yeah.
the organization and the services that you provide.
I kind of like how you asked me about the Amazon story first, because now I'm seeing maybe this is a consistency of me thinking that I wanted to create a platform, right? It was the same thing. Amazon had a platform. Now I want to create a platform. Platforms are oftentimes a very efficient way of connecting 2 sides of a supply and a demand, or a need and a want. So Lend Donate is a 2-sided marketplace where we offer loans to nonprofits on the one side, and we have to raise the capital, raise the money somehow. And on the other side, we are offering investors a way to invest for fixed income into an investment note that where the money is used to support the nonprofits in whatever projects. I'm sure we'll talk about those, such that the investors get a rate of return back. So that's what we do. The unique aspect I'll toss in this, why we're different from anybody else out there. Already still to this day, I talk to a lot of people, nobody does it the way we do it. And the really key element is that the innovation that we have is not so much in the technology. I mean, yes, technology definitely supports the ideas. Our innovation is in pricing. When we invest, we can think, okay, well, they're a nonprofit, and that's why they're asking that I only get a 1% or 2% rate of return back, even though the risk may be slightly higher. But why don't we give investors that ability to set a rate for themselves? And that's what Lend Donate investors get. I see a loan on the marketplace, fair market rate may be, let's say, 7% interest for 3 years. That's what, Lend Donate's credit underwriting team did. And then I get to choose anywhere between 0 and 7 in terms of interest rate that I want back. And so on the platform, we source the best offers, bundle that into one loan, and then the nonprofits repay. And then we take the repayments and reallocate it back to each of the lenders based on their own rates. So you might have wanted 2%, I might have wanted 7%. So each month we get different rates of return back.
First off, I love the way you described a platform and the connection that it creates between a need and a resource. And it's also amazing that you saw this opportunity to create the financial connection for nonprofits to have a more preferred path to getting secured funding or a secured loan. Would this be considered a secure loan, or does this fall into a different category for a nonprofit?
That's a great question. We focus on high quality loans in a sense that as either secured by real estate or by other things, or if it's unsecured, we still look for generally demonstrable source of repayment. It could be because they have contracts out. It's just a matter of time. A revenue will come in. Do credit underwriting in very much the same principles as a bank would, which is look for the source of repayment. And then also during the course of repayment, whether they have enough free cash flow to afford the loan.
So those are some of the criteria that you're looking at from the nonprofit side. What other major considerations are you looking at when evaluating possible loan to a nonprofit, depending on whatever that size is? And yeah, just curious if what are all the boxes that a nonprofit might need to check to even consider applying for a loan?
A nonprofit application standpoint, we try to make it as easy as possible because God knows there are so many checkboxes they usually have to check to apply for grants. So they're used to thinking, okay, do you fund working capital? Do you do this? And they navigate that space. We try to just really ask a lot of general questions. We don't put a lot of criteria on. Our primary goal is their credit profile. Can they afford it? Is this a prudent thing for the organization to do? As far as causes, we're pretty agnostic, meaning that they have to be a 501c3. We're not trying to decide for them, you're doing your mission wrong or anything like that. They're 501c3 with at least 3 years of operating history as demonstrated by filing Form 990. We do ask for additional documents, obviously, but that's the basis. Just apply. We'll talk. Our capital is generally, as you can imagine, there's a range of investors on our platform. We'll get to them. So we're not a cookie cutter. We've presented loans that are like, oh my gosh, well, obviously they qualify. A mega nonprofit just really wanting strategically to take out a working capital loan, or there are turnaround stories, right? If this loan did not come through, bad things would happen, kind of thing. And so we consider all aspects, qualitative and quantitative metrics when it comes to the nonprofit. Eventually, I can use some stories to illustrate, but I'll leave it at that for now.
Definitely want to hear one of those make or break stories. You led us to kind of the investors and the investor profile. So you said your lend donate is cause agnostic, right? Doesn't matter what you're working on. If you're a 501c3, you can apply. But how about on the investor front? Are there investors that are only focused on specific causes or have very specific requirements that you're creating a matching process between nonprofit applications and your investor pool with? How does that work?
Yeah, no, there is a wide range, and some investors are looking for specific causes or a few, maybe a few of them. We do not require them to tell us upfront. So it is like, here's the platform, here are active projects. You select the ones that that's has your name on it, right? Calling out to you. It could be because of the duration. Maybe it's a short-term, long-term loan. It could be because of the cause. It could be because of the risk range. So we help our investors guide them to thinking like which one is high risk, which one's low risk by giving it a risk rating. So gold, silver, bronze, as the name suggests, gold is more secure than a bronze. So the range of investors come in and select what they want. Now, within that range, there are investors who I'll give an example. They may use their IRA money, like retirement funds, to invest, and they really just want a rate of return that's market rate. And this is how I'm going to fund my retirement by providing capital for use by nonprofit already is impactful. Then there are investors who come in, they may be using money from their donor advised fund or their private foundation. The money has already been set aside for philanthropy. So why not invest mission aligned, right? So that they're using this as a way to invest, get a rate of return, so that when they're ready to donate, give grants to whatever organizations they choose. It could be maybe ultimately be the borrower, but they then have a choice to invest first. And then they may say, then for this money, interest rate insensitive, 2% is fine with me, or maybe even 0. So we let the investors choose.
What a great model. And you mentioned donor advised funds. I feel like I need to do a whole episode on DAFs alone. So I won't take us down that rabbit hole, but what are the main reasons that nonprofits are applying for loans? And do you see a dynamic between fundraising strategies and how they complement a decision to apply for a loan?
Yeah, I'm going to write down, make sure I don't forget the fundraising aspect. Taking on a loan, whether it's nonprofit or you or me, is basically borrowing from the future, right? We're expecting some sort of a cash flow in the future, but we want to fast forward the money to now so we can accomplish some goal. The goal for nonprofits is no different from a lot of businesses, which is, hey, I want to buy that building, right? I want to finance up my own property. Or it's a chicken and the egg of bridging to future cash flow. For nonprofit, where it's different is their future cash flow could be a grant, whereas for businesses is future contract or other fundraising. So we look at it through that lens, and so therefore we do a number of working capital as well as bridge loans, and then also real estate financing. So those are more of the typical use of funds. It can definitely be integrated into fundraising. So for example, we at any given time we have some projects on our website, and we also are talking to a number of nonprofits behind the scenes, getting them ready. Right now we have one, they're in the process of launching their capital campaign. It may be 3 years long, for example. They think that by the end of the 3-year campaign, they would raise majority, if not all of the money to pay for the building that they're moving into. Then they need to take out a loan now, purchase the property, and then work on paying it off. So it gives them the runway to purchase the building when it's available, as opposed to, okay, now I go into my capital campaign. Of course, by the time the campaign is over, the building is probably sold as well also. So that's integrating into a capital campaign where they may be presenting the donation story, give us a 3-year pledge, and strategically decide which investors to approach, usually the ultra high net worth investors, and say, hey, you know what, if we do a private loan with you and 4 other people, we actually can get this done more cheaply, efficiently, and you get a rate of return as well.
You're so well spoken about this topic. Clearly, you've done your work and you've worked with plenty of nonprofits to evaluate their situation and the option and help connect them to this capital. What are some of the biggest lessons that you've learned about nonprofit financial planning given where you sit at the table?
That's a really broad and really good question, actually. I can go into the weeds, but let me actually see if I can also paint the big picture first. A lot of people have a set notion of their financial situations, and that one is a weak position, because we usually are the recipient of donation requests, grant requests. So what do they do when they ask for a donation or grant? Of course, is to highlight their need and the insufficiency and the great need that is not being met in society. So then we feel like, oh my gosh, if I don't donate, then good work may not be done. But on the other side of things, when they're not asking for donations, they also need to run a very efficient organization to survive and to succeed. We tend to work with those that have those, more solid plans, and not just like, we don't know how we're going to make it to next month, right? Just like businesses. So when we look at them, we consider risks, just like investment risk, right? Underwriting risk. Will the contract come through? Will they, be able to earn that income, let's say it's tuition for a school or ticket sales for arts, even for nonprofits where they get 100% grant revenue as opposed to any earned income. Those tend to be the nonprofits that serve human services to homeless or low poverty. I mean, there's no earned income. However, you look at their financial statements, oftentimes like, hey, year after year, they are able to generate increasing in dollar value kind of revenue. And you wonder, well, are they any weaker than a school that can earn tuition? One would argue, may argue actually no, right? Because it takes a level of skills to write grants, to know which grants to go for and when to branch out, and then kind of manage the cash flow and expenses. That's what we specialize in. We not only look for risk protection, which is what underwriters do. Underwriters think about risk all the time, like, okay, I don't want to lose my principal, and all that. But opportunity cost, if we're thinking about that, these are really important nonprofits, the opportunity cost of not funding them sufficiently is that society does not get to getting all the important work done. So I also actually think on the upside, that, when is it the right time to take a risk and step into an situation when nobody else would. So I have a story I can share that's one of my favorite success stories when we were their last resort and the outcome. But let me see if you have any questions about what I said or comments first.
Well, thanks for pausing for a question opportunity. The only one that came up real quick was ROI. Of course, there's the return on the investment from your investors, but then how does the return of impact also fit into the evaluation and the criteria? I think you mentioned some of that, but does that actually fit into the process for these types of loans?
It does. And again, true to form, we have not really published any aggregate data. We probably will do our 2022 impact report in a certain way that highlights the impact we've created. But now that, especially with ESG in the news and all the, what kind of impact is being created, what are the metrics? We already see that since the beginning of social investment, the social impact measurement is very personal, right? So if I say, okay, that's impact to me, that may not be impact to you.
Mhm.
And that's why I feel the way that Lendonate's platform works is that you and I can create our own impact. Some people feel that investment is only impact investment if in the lending example, and I'm willing to capital be utilized for nonprofit use to finance the community center or a school, rather than trying to convince everybody to agree to one set of standards is I'll let you choose. And you and I are in the same loan. You feel strongly that having capital available to nonprofit is impactful. I feel that it has to be concessionary. Then whatever I invest is like, okay, well, I can afford to invest 0%, so I'm better than you. Not really, because if only I allow my $1,000 to be used as in the 0% interest, and you have $1 million, you're saying, you know what, the $1 million can matter just as much as your 1,000. I mean, that's not a perfect example as I'm saying it, but you see what I mean is it's multifaceted. So why dictate the terms and not let the investors decide for themselves? Ultimately, impact needs to be personal to me and satisfying to me as an investor and donor. So
Right.
that's what we hope that a flexible platform like Lendonate can capture both ends of the spectrum. One end is philanthropy, the other end is market rate impact investment. Then anybody can slide back and forth between the two sides pretty seamlessly.
Well, it's a great channel for equitable lending, first and foremost. And I liked how you framed impact from just even choosing to participate in providing loans at a below market value is impact of itself. And I agree. Social impact measurement is a very messy topic, and it is personal for every individual, depending on where your vantage point is. And there's so much room to help quantify and communicate impact in a more meaningful way. And it's an incredible challenge. And I'd be so interested to learn more about your upcoming report. And, even if there's something I could do to help with
I would love
thinking
that.
about those public metrics that are out there and the outcomes that you all are driving, no doubt that it's hugely impactful. So tell me about a hugely impactful story of a nonprofit where you were able to step in and be that make or break solution.
Yeah, I would say this is one of my favorite stories. It's like choosing, trying to pick a favorite child. We're not supposed to do that. But this is one of my favorite because organization has been around for about 20 years. They serve community health in the Latino communities by having community leaders train and providing resources and education. A few years ago, they had a strategic direction to broaden away from 100% government grant model. I think they were about $2 million annual run rate budget kind of size to diversify away from 100% government grants, because we know that although that's good to have, challenging to rely solely on government grants because it's oftentimes delayed. So they identified a way to earn income through private organizations like the Kaisers and the Sutters, the larger healthcare systems, where they will also need the nonprofit services. But in order to pursue a completely new types of contract, you need to hire people, go secure the contracts, negotiate, And it takes months to get the groove going and everything. So they were running lower on cash, and they applied for grants to help them do that. And they did not receive any private grants. They did not receive any other bank loans. They were not approved for that. So long story short, we gave them a $100,000 loan. I believe the ceiling rate we set for them, when we establish what the market rate is, we call that our ceiling rate on the marketplace, because you can invest lower, not higher than the market rate. So I think we established the ceiling rate to be 7 point something percent rate for a 12-month interest only loan, $100,000 done, 7 months, they prepaid the loan because they no longer needed it. They were very successful in securing those contracts. And now I think 3 years on, their size is 3 or 4 times what they used to be. Now, it's not all because of the private contracts, but the private contracts definitely help them secure their place in establishing their expertise and their role to play in both for servicing government contracts type of engagement as well as private. So I love it because the executive director was, all nonprofits leaders, I feel like, they have to have some level of grit. She was thoughtful, she took a risk, she identified along with her board a new opportunity and pursued it despite knowing that they were taking risk on a kind of a cash depletion type of thing. And then, we were so happy we were able to support them to expand their services.
Clapping like for that one. That's a great story, and the fact that you have so many more similar to that is an incredible testament to the impact that you've been able to create, Vivienne, through Lend Donate. And you said nonprofit leaders, it takes a lot of grit to be in that position. It also takes a lot of grit to be an entrepreneur and a founder. And I don't really see too much of a difference as I'm going through this podcast between the label of an entrepreneur and a nonprofit founder. So I'd love to hear a little bit about your entrepreneurial journey, because I know it's not an easy path to take. What have you learned about yourself throughout the journey of starting Lend Donate?
I have not thought about that question for a little while, but it is a very important question, because prior to my starting Lend Donate, I would say not for one day did I think I wanted to be an entrepreneur. I mentioned business school. I also did not choose to emphasize my, focus on the study on entrepreneurship. So there definitely were surprises, not that I didn't have head knowledge as to what I was going to, run into. I think first I knew that I had to put down a lot of ways that I was used to. Schwab, American Century, part of Bank of America, is all big corporations. Big corporations are established and has staffing and all the resources. You think of an idea, and then it's like, okay, do I get the budget approval? And then you go run with it, and there's a whole team around you, right? Entrepreneurship is very different. I always gave the example, I was so shocked when, the excitement of starting a company, and then quickly wore off when I was like, oh, for the website, you're asking me to pick a font? I don't know. I don't care. Right. So those were things that I learned, that what I liked and not liked. It's not like those are not fun things, but there's an urgency at the beginning, the first year, to get things going and get things up and running. And sometimes to me, I found that there are just elements of being an entrepreneur I didn't like. So what I learned from that is I quickly found the right people to wrap around me, contractors, outsource services to handle things better than I could. And then I think the other element I really want to say was, people have warned me, fundraising takes time. Do not underestimate how long it takes to fundraise, because maybe 3 months, 4 months, and then it's always longer than you think, because even just scheduling time with people is hard, right? So I think I didn't anticipate the challenge of fundraising, especially with investors that say that what you're doing is exactly what they're wanting to fund. Just for example, the investors who say they want to fund impact. Well, that means a lot of things to the investors when they say they want to fund impact. They want to fund women. Well, yeah, that's really broad too. And then also when they want to fund You can go through all the motions. So I had one experience where, in hindsight, I didn't do enough research because there was a lot of demand on us providing information, going to pitch, going to follow-up meetings, and then providing like a dozen references so that they can check. And then in the end, it may be for a very small check, right? So $30,000 or something like that. It's like, oh, was that really a good use of my time or the team's time? So there are a lot of things to consider in the fundraising that I've learned along the way. I won't bore you with other details, but certainly it's a big shift from corporate to entrepreneurship.
Yeah, no, nothing boring about that. And thank you for sharing your experience in such a thoughtful way. And your response, as you were talking about the challenge of fundraising and how long it takes. We had an episode with Rashida and Anna, who are career fundraisers, and that's one of the things that they said they experience with nonprofits a lot is the gap in understanding of just how long it actually takes to cultivate those relationships and receive funding. And I've had the same experience as a founder and entrepreneur myself, raising capital for Match Nice. So it helps to share these stories because I think it normalizes some of the experience. And like you said, it's one of those things where people tell you to expect that, but it's one thing to expect it and experience it than to just kind of hear about it. So thank you for sharing your experience with all of that, Vivienne.
No, of course. And I think so. The good news is, I think what we've learned in the past couple of years, especially during the pandemic and other, kind of traumas that the country has gone through, philanthropy is also changing. We'll go through the names, but like the large donors are recognizing that the old ways of being very nuanced, and it's like, oh, I need to do my due diligence to be responsible to give out before we give out the money, and that ultimately tends to hurt color and nonprofits that are smaller. So I'm seeing now that there's just sometimes, we trust you. Here's the money that you put in your request. We're not going to attach a lot of strings to it. And the leaders, rather than focusing time on managing donors, they can actually spend more time focusing on managing programs and services. So I'm seeing that improving, hopefully faster.
Well, that's a exciting signal to receive. One of the things that we've uncovered throughout our market research with Match Nice is that there are situations where nonprofits may be subservient to donors depending on those check sizes and what the donor deems as an important use of those funds, whereas the nonprofit is truly the entity that's best situated to dictate what those funds should be used for. So it's really refreshing and exciting to hear that you're seeing some of that happening. And is that directly with the investors that you're working with, or are you seeing that on a broader level?
On a broader level, I'm also on the board of a local foundation here, Los Altos Mountain View Community Foundation. And a few months ago, I participated in League of California Community Foundation Conference and hearing it from other foundations as well, that donors are now becoming to understand that money should not be held as almost like I have more power. I've heard this before in the context of entrepreneurship, that, entrepreneurs, you're going to pitch the VCs or angels for money, and you think you're in a lower position, but actually not. The VC's money is only money until it gets into your hands. You turn that money into a profitable endeavor because of the quality work that you do. Dollars are more of a commodity. And if we think about that, it's the same thing for philanthropy, that let's say I care about the environment. I want the environment to improve. I want the water to be cleaner. I can't do it myself. I need to give my money to somebody who knows what they're doing. And the doers are probably more critical, to me, more critical than my money, right? If I don't fund it, somebody else will. So I'm actually probably should have that perspective when I think about all the great work that nonprofits are doing. They are doing the hard, heavy lifting, and I'm just enjoying to be part of it with the money I'm donating.
Couldn't agree more. You mentioned a shift that's happening that needs to happen. What about any shifts that you think need to happen in the sector that maybe aren't moving in the right direction?
But I'll bring up one point, which is earlier you mentioned donor advised funds, and I'll include private foundations as well. Without them, a lot of the great work would not be done. However, we also read about some of the criticisms of especially donor advised funds having trapped money that has already been set aside, tax deductions already taken, but then it's just kind of sitting in, some mutual fund allocation or some market investments. The donors are actively managing, like contributing new ones, dispersing old ones. That is very stuck. There are billions of dollars that are set aside for philanthropy that should be out. But, be that as it may, donors should have a choice of where they want to donate. So if legislation that can affect change, I would actually require philanthropic accounts invest in a minimum level of impact investment. That, whether you choose it to be something like Lend Donate, a CDFI, or equity investments, something that is mission driven, so that before you decide to grant it out to wherever, that money is going to work on that make a difference. You hit a unicorn, and now you have 10x money you can donate. So invest wisely that way, as opposed to being stuck in some. I'll pick on Schwab because I used to work there, but just kind of like Schwab Charitable offers great investment products in the charitable as well, but those are more plain vanilla investments. So it's not really actively doing any social good. So I would love to see more people use their staff in impact investments.
Intentionally, regularly, at higher rates. So definitely going to have to do a whole episode on donor advised funds, but the 101 on donor advised funds, you mentioned Charles Schwab, but you can start a donor advised fund with the likes of Fidelity or Vanguard, or many foundations also offer access to donor advised funds where you can deposit typically a large sum of money that you get an immediate tax write-off on, and then the institution has the control of investing those funds in the market to accrue interest, but there are minimum annual disbursement or amounts from these accounts, and it might vary depending on the institution. And what you're saying is that when you look at the donor advised fund landscape, there are billions of dollars sitting in these accounts that could be helping nonprofits now, but because they aren't being as intentionally managed to drive social impact, they're more so, a majority of them are just sitting in accounts accruing interest.
I like to be fair in my presentation of a criticism. So I criticize the stuck money. But let me present the other side of why donor advised fund is important as well. A lot of the reasons people put money into donor advised fund, as opposed to why not just donate directly to Red Cross or wherever they tend to donate right then and there, is they want some time to be able to make a decision, disperse out for an immediate tax benefit. If they donate it all there, then they take the tax benefit this year. And maybe that lines up with their, maybe they also just sold their company and they have a huge tax liability they expect to want to offset. So I can't say that, hey, if donor advised fund did not exist, we would be in a better world. I don't think that is the case. And I also don't want to say that Schwab or Fidelity offering their commercial products is also not as good, because they make it really easy for people to start with $5,000 or $10,000 and they put it aside, and that's their 2 or 3 year giving. So that's also really good. The fees that they charge tends to be very competitive, although that's because the money generally are invested in their own products. Like, the Schwab or the Fidelity charitable tends to offer choices of investment in their own Schwab funds or the Fidelity funds, make their revenue on the back end, but still is a very good product, like a starter program. Once people get into it, and then now they're seeing maybe they're more and more successful, they want to put away more money for donations in philanthropy, then they should think about how to progress to the next scale. At a minimum, maybe move the money to your community foundation that could give you a broader education and exposure to the community needs. So each community needs may be slightly different. So by being with the donor advised fund at the community foundation, then you get to know more, be more aware of your community. And then there are niche donor advised funds such as impact assets that allow you to customize your investments. So this is not a daft talk, but it really does go hand in hand because so much money can be invested to further the work of what we donate money for. I always say philanthropy is not about giving away money, right? Philanthropy, who wants to give away money? Nobody. But I give away money because I want to see certain things done in society. And so why limit ourselves only to donations and grants? We can also use our investments.
Such a well-rounded perspective on the landscape of donor-advised funds and just financial vehicles in the nonprofit sector. Thank you so much for sharing your time and expertise with me and everyone listening to this podcast today, Vivienne. One more question for you. What do you want your lasting legacy to be?
If I could have this title, after I'm long past, that I helped shift a professional investment thinking away from being invest to maximize your return so you can donate more. That is a very binary type of thinking. And I think in this day and age, we can integrate some more. I don't have to say, well, I'll just pinch my nose, invest in some investments where the companies are, not all that honorable, but hey, they're giving me a great return. Don't worry, I'm going to take the money and then I'm going to donate it. That kind of binary thinking, I hope I would be able to do my part in putting that in a rear view mirror. And that at one point we thought that going forward is all about the whole person, the whole wealth, and our whole being. That we don't need to limit ourselves. We put every being behind what we want to see happen. And that's our money, time, and talents.
What a beautiful response. I think you're making that impact now, and I appreciate you speaking all of that into the world, Vivienne. It's been such a pleasure having you on the Nonprofit Lab. Thanks so much for joining.
No, thank you for letting me tell the story. And I really appreciate you doing what you do and getting the word out on all the great work that nonprofits are doing.
It's getting to speak with leaders like yourself that we get better every day. So thank you so much for your time and perspective. It was great.
Thanks.
Madeline, Ibrahim, welcome back to the Nonprofit Lab. How are you both doing?
Doing pretty good. Glad to be back.
Doing well.
So this solution, Lend Donate, I just think it's so unique and fascinating the way that Vivienne has created this marketplace that connects nonprofits with investors and in a way that creates a competitive bidding landscape based on an investor's interests and ultimately creates an opportunity for nonprofits to gain immediate access to capital at a lower rate than they might get if they were to go to a bank. What did you guys think of this model and the concept that she's created?
I think it's, similar to the conversation that you had with Dom Calms. I think it's another really innovative way to accelerate getting capital to nonprofits. We've heard this in our research a lot that, for these big kind of capital projects where nonprofits need money now, especially in the example she gave around real estate, it's a great example. You need that money right now. You can't wait for, a grant to come through months and months later to buy a property that you're, looking to buy to expand your programming. So yeah, I think it's a great solution. And it's another really interesting, innovative new thing in philanthropic tech. It's great to hear about it.
Yeah, no, I was going to make the same point, like regarding our previous conversation with Be Generous. I think it's really interesting to see just the people that end up coming into the nonprofit space, just with their very diverse backgrounds in different areas of like the corporate sector, and like coming up with these very unique solutions that kind of take pieces from, the typical industrial landscape that we see, whether it's, Silicon Valley, Wall Street, et cetera, these corporations, and kind of building it, like, aspects of that into solutions for nonprofits. So like Be Generous is one example, this is another. And it's really interesting to see taking modern approaches to kind of fueling the fundraising landscape and supporting the nonprofit sector when it needs it the most.
It's a completely new concept for me. I totally understood that nonprofits could apply for a loan just like any small business or individual. The way that she's created this competitive landscape for investors to make their bids at whatever interest rate they're comfortable for, and then looking at all of the offers that are out there and kind of matching the best rates for these nonprofits with the goal of like constantly looking at the market rates as this benchmark and trying to beat those rates, I think is like really unique and interesting. And also makes me think of just like how investors in the startup space can also look at investing in startup, like a company like Matchnice, for example, right? Where, raising around and there are different offers on the table. And obviously, like we want to go with the one that's of best interest for us. And I appreciate how Vivienne has created this system for the nonprofit sector, and Madeline, as you said, created this immediate access to capital. And one of my concerns when I first heard about this was like, wait, like you're just giving loans away? Like how are nonprofits going to pay these loans back? And it seems like it's good that they're doing a lot of the due diligence to like understand like, okay, where's the cash flow? Like, will you be able to pay this back? Like, oh, you've got a grant that you've been approved for, but that fund's not going to hit your account until a few months, but you need the capital now. So just a really creative solution. One of the other questions that I had that came up was just like the view of impact and how that's being considered part of this. What did you guys make of that connection between impact and what Vivienne is doing?
I like what she said, just the sentiment that we've heard in our research over and over, which is that impact means something different to everyone. I really like that her platform gives investors, they don't start by saying what matters to you, and now we're going to show you some opportunities to invest. I like that they let investors decide what's most important to them. Is it just doing good? Is it the specific cause area? Is it the interest rate? Is it, what is it that they, it's putting some power in their hands in terms of what they choose to fund and support, but it's not, keeping it within that parameter for the interest rate, like she mentioned, makes it so that nonprofits aren't losing out necessarily, like you're working within those parameters and the investors can choose what they want based off of that. I just think that's really important to realize that, and we've talked about this a lot before, but impact just means different things to different people. Impact to someone might be lending their time and expertise. Someone else's impact might be writing a big check. Someone else's impact might be hosting an event or sharing someone's story, or, it just means something different to everybody. And I think that's what's so important about the storytelling aspect of impact in general, is that the people that are there watching transformation happen, kind of telling the stories of what's going on the ground and everyone interpreting that as they will.
I agree with Madeline. On top of that, we mentioned that impact, means a lot of different things to different people. The same comes with, ROI. Does I stand for impact? Does it stand for investment? The platform pushes forward the concept that it should mean both. And the idea of investors, putting their money in to support these kinds of causes. Lend Donate's essentially giving them sort of like a win-win equation, where it's like you're not only getting some level of return that's respectable and fair, but you're supporting a cause, and the amount of impact that investment puts forth is definitely going to be significant, but also educating them on the fact that ROI doesn't just come from, investing in software companies or investing in a startup. It also comes with, putting money into the causes that support the overall ecosystem, whether it be, one of the SDGs or causes that spread outside of that. It's a path forward on educating the investor side of things, and the investors themselves on where their money can not only give them some level of return, but also, result in changed in a lot of degrees.
That was huge for me, that part. I mean, it's Dom Calms talked about it, and, we're obviously trying to do it. And Lend Donate is also, Vivienne's answer at the very end about her lasting legacy. Just, it is possible to put your values behind everything that you do, including your investing. You don't have to hold your nose and invest in something that is doing something that goes against your values and your beliefs. You actually can wholeheartedly, there's enough abundance out there and opportunities out there. And I love that she's creating this opportunity for investors to put their investments into nonprofits and do good through those investment vehicles. That's just a really powerful statement about legacy, but also, it is possible to do good in all ways.
Agreed. And I believe her exact statement was like, her lasting goal and her lasting legacy, her hope is that she can help shift professional investor and investment thinking from maximum ROI to donate more. And that goes back to what we said previously, where it's ROI stands for investment and impact. And, a bigger donation doesn't necessarily mean, or it doesn't have to mean money is just lost and going to a cause. It can also mean investment thesis being put forth. And that's where this platform comes into play. And it's very interesting to see it kind of in execution.
Yeah, those are all really great points. And around this equation of like ROI and impact, I think her point about impact meaning different things to different people is such an accurate reflection of where the sector as a whole is right now when it comes to impact measurement. Everyone has different takes and perspectives, and it also points to this massive opportunity to come up with a more objective standard way of looking at the work that nonprofits are doing on the ground and the impact that it's having. What makes it such a complicated issue is there's no one cause to one effect kind of formula when it comes to the work that's happening. Oftentimes the work that we're doing, whether it's, serving a bowl of soup to someone or providing housing or planting a tree, its impact becomes easy when you look at it through this bounded lens of like what is happening here. But there's so many other factors and outcomes that are at play, which makes it really tricky. And Madeline, you mentioned Dom a couple of times from our last episode that comes up. I think there's a reason why no one has been very successful at creating this standard of measurement. And one of the things that we're very interested in doing is like, how might we look at publicly available information like census data or like the social progress and progress index and like all these other data points to see like, is the work that is being done actually moving the needle in a meaningful way? And then like, well, depends on how you define the needle. So it's just a huge opportunity in the sector. I don't think anyone has a really clear answer on like what is that solution, but seems like a huge opportunity, right?
You talking about that made me think about hypothetically, right? Imagine there's a nonprofit that has just killed it with impact measurement, right? Like they are measuring their impact and they're doing it the right way. And it's really like they've got all their numbers, they've got their story, they've got everything. They're really seeing everything on an upward trend, whatever it is. It almost still doesn't matter in a way because it's just that one nonprofit measuring. It's important, but in the overall problem, the way to really understand what the impact is to say, where's everyone that's working on this same thing? Every nonprofit, even if they're working on the same exact problem, works in a different way. And, we understand that collectively, everybody, the efforts that everyone's making working towards solving the problem, where's that impact measurement? And I think even if you're doing it really, really well individually, it's still not part of the overall collective. And that's what we're trying to crack.
Yeah, it makes me think of, it's totally slipping my mind, but we met a founder from Ireland. Got to get him on the show because they're working on solving this problem right now of looking at all this publicly available data. And, there's a number of companies that are doing it, but what seems to be missing is this by cause, like uniform, like here's the baseline metric or the outcome that we're looking to drive. And there's all of these, hundreds and hundreds of different input variables of things that you can shift. But like, this is the one thing that we're like really to change. Like that standard agreement doesn't seem to really exist right now. And I think it can start at the cause level, but then getting everyone to agree on what that is, I'm sure is like a whole nother battle. This other path around, when I asked Vivienne about things that she would like to see change in the sector, she mentioned a topic that has come up many times in our conversations, and it's donor advised funds. And it's something that we really need to find someone to join the podcast to kind of break it down a little bit further to help us understand. But donor advised funds are like the fastest growing philanthropic vehicle in the United States right now. And there are billions of dollars sitting in these investment accounts where, a lot of it's not being distributed to nonprofits, and there's a lot of red tape and other systems that we need to dive into to understand why. But just curious if any thoughts came up for you guys around that part of the conversation.
For me, I just was like, here we go again with the DAFs, all this capital being stuck in DAFs. And I don't know. I mean, I think it was news to me as we've been doing our research on DAFs. Yes, you put your money into a DAF and then it's kind of out of your hands at that point. Like you're allowed, if you're especially with a bigger firm like a Charles Schwab, or that's the example she gives, or one of the larger ones, you give your money and then you can advise, but you don't actually really have control over where that money goes, because right now it's kind of being used as an investment, by the firm or whatever it is, and these safe bets to build interest, blah, blah, blah. Yeah, that was just kind of news to me. Like, wow, it is kind of out of your hands at that point. So I like what she was saying about DAFs as a pathway, where start with a firm like a big name like Fidelity or Schwab or whatever it is, just because they have a good easy entryway to start having a DAF, but eventually moving into somewhere where you might have more control over where your funds go, like a community foundation or somewhere that's just actually closer to nonprofits, right? Like these big financial institutions aren't necessarily experts in what's going on in the nonprofit community. They're experts in investing. Yeah, I just really liked that, the visual she painted of it being a possible pathway where you can move to having your DAF in a community foundation or something like that, just to get closer to the causes. And obviously we're trying to figure out how we can have DAFs be something that you can put through Match Nice eventually. So
this is probably going to come up later in our conversation, but I recall Vivienne saying that the money in DAPs, the money in private foundations, this money is side for philanthropy. So let's use it. Let's put it to use. Let's get it out there and actually let it accomplish what the purpose of it being put away was for. And it's really interesting to see that money's just sitting there. Let's find a place to put it. Let's find a way to make sure that the money's actually being used for maximizing impact for whatever cause is of interest to these investors. And that's why I like the approach of them also, not only having a range of causes that can be supported, their focus is also ensuring that there's a range of investors, ranging from the IRA money they have put away to these DAFs and private foundations that have this money. It's going to be interesting to see in the long term how these funds are being used. And this is just one step in the direction of making sure they are actually being utilized the way they were, the purpose of them being put away was for. At the end of the day, I feel like a lot of the money in DAFs and in these foundations has been adding up, but not as much is being used as could have been. For example, since the COVID pandemic hit, it's been roughly a couple of years since that happened. And I feel like if there was a way to maximize the impact of these DAFs funds, there probably would have been a different, process of coming to where we are today. In terms of handling the situation and a bunch of different causes, this just being one of them.
Totally. We've only really begun to scratch the surface of this entire donor advised funds landscape and just the amount of good that it is having, the potential for more good that could be had, which I think is where most of the focus is right now. And, when we first learned about donor advised funds, when we were ideating around Match Nice and what we could do in the post-pandemic kind of environment where nonprofits barely had any cash flow, and a lot of the sector was looking at these donor advised funds and saying, well, there's billions of dollars sitting here that they've already, people have already received their tax deductible donations on it. Give us access to these funds. We need it now more than ever. I think it's an incredibly complex issue, and one thing that we'll definitely want to springboard into as part of a future episode. But I think we as a team have this consensus that whoever you are, whether you have a donor advised fund, that there should be a greater sense of control for the actual investor to be able to make the decisions for how those funds are used. And I think what Vivienne is pushing for, and a lot of people in the sector are pushing for, is to also increase the minimum disbursement requirements from these accounts. And I should note that every financial institution has their own rules and requirements when it comes to donor advised funds. Not everyone is built different. Everyone may have different minimum requirements. But what we've talked about is, man, wouldn't it be amazing if, like, you as an investor, you could, with one of these accounts, had a system where you could very easily search for causes, nonprofits that you care about, identify initiatives that you care about, and issue grants from your account to those nonprofits. And the status quo that we're pointing to right now is that it's not that easy, right? Like, and some of the challenges is, like, you can make a request for a grant from your donor advised fund account, but ultimately it's up to whoever you've relinquished your investment funds to give you a go or no go on that. There's this whole initiative, like Half My DAF, I remember one of our advisors had mentioned to us, where some donor advised fund individual who had million plus dollars in their account was trying to give away their donor advised fund money, but financial institution was pushing back and not making that happen. So it's a big topic. It's also quite a controversial topic in some regards, because there's a lot of money and power behind these accounts. And I'm excited to dive further into it. So we'll definitely have to find an expert to help us break it down.
The way that money's being held in DAFs is the way that system works currently right now. But I think that she also touched on a mindset shift that I think needs to happen, which is the whole concept of, like, holding on to money, holding on to your DAF, right? Like how the person you just mentioned was trying to literally get rid of their DAF, half their DAF, and they couldn't. Just because of that's how the system works. But I think the mentality of being like, oh, I need to save this for whatever time. 2 points on that. One is that I've just learned this as a lesson in my life, that scarcity mindset and that holding things close to you just doesn't serve you or anyone at all, right? Like, if you have a connection, a membership, money to give, whatever it is that you have to give it, right? Like, life is going to be so much better for you, and see the return of the things that you give, more than the, like, reward of holding it close to you and keeping it away from other people. That's just a life lesson for me that I think, I just think of it when I think of all the money being held in these DAFs. But also, I really like the concept that she said about investors that have money using, kind of almost like outsourcing their desire to do good by investing in these companies, right? Like, I really care about animal welfare, for example, but I don't know what to do about it, right? I just really hope that animals are doing okay, right? Like, that might general sentiment in the cause that I care about. But by investing and my money in nonprofits or organizations that are doing exactly that, I'm outsourcing my own desire to do good to the people that are doing exactly that and know how to, move the needle the most. So I really liked that concept that she shared.
Yeah, that's the real beauty of Vivienne has created, to me, is this new channel for investors to put their money to work immediately in a way that is helpful for the nonprofits and also gets them that return on their investment. So I'm really excited to see how her organization continues to grow and evolve. I love the way she's thinking about creating the kind of matching system between investors' passions, what they care about, and nonprofits and their needs. And there's a lot of mission alignment with what we're doing. And for me, the last two, this episode and the episode with Dom, I think highlight some of the very creative solutions that are coming out in the philanthropic tech space to create more access to capital for nonprofit organizations. And just really inspired by Vivienne's entrepreneurial journey and what she's created and the impact that she's supporting in the space.
I mean, there's so many. I've had the same exact thought about the last couple of episodes, talking about people getting really creative about how to get more money flowing to these nonprofits that are like stuck in grant land. I think that it's just awesome to hear about people that are kind of trying to, they're like hacking the system in a way, or just coming up with really creative ways to get them the money that they need. And I think it's great. One other point I'll make, what Vivienne was saying about lack of trust in general in this sector, and saying, okay, we've decided we're going to invest in you or give you a donation or whatever it is, but let us do our due diligence first, and how much that hurts founders and fundraisers of color. I think that it's something that we've seen across the board in our research around nonprofits, is this kind of casting of doubt on like, how will you be using the money? And, let us do our own research on how you're going to use the donation. And I think another mindset shift that needs to change, which is saying like, and it's why we're with our platform trying to be really all about transparency on both sides, saying like, I'm not trying to, as a nonprofit, I'm not trying to tell you what you want to hear, person who is providing a grant and kind of like lying to you about what I plan to do with your money just because I need your money. So I'm going to say what you want me to say. Empowering nonprofits to say like, I know what I'm doing. I know how to save cats or whatever it is. Here's what I'm working on. Here's what I need money for. So it's empowering that transparency on that side, so that there shouldn't be a casting of doubt around what you're using the money for. I think that's part of where the disconnect comes from, of a funder saying, I want you to use the money for this, and the expert nonprofit saying, okay, that's not really correct, but sure, because I need the money to do the actual work that I need to do. And so I think just that disconnect, I think, and it leads a lot to the lack of trust here. So I'm excited to see how that moves in the right direction over time.
Awesome. Well said, Madeline. Ibrahim, Madeline, any other points, comments, thoughts from the episode that you wanted to share?
I have one more on the side of, I know in the last episode, we talked a lot about, and in several episodes, we've talked about how a lot of things that nonprofits experience, they're businesses. We're also a business. We're a startup. We're fundraising the way that they're fundraising in very different ways, but we're all fundraising. Thought around, it's just a lesson learned, us as a startup fundraising. And I think that she was talking about how she as a startup founder has had the same experience. And I know that nonprofits go through this too, which is challenging the power dynamic between you as someone asking for funding and the person who's providing the funding. Because I think a lot of times we end up, as people asking for money, end up being like, please give me the money, and seeing ourselves as a kind of subservient. It's more of a level playing field, right? Like, we're providing our skills, our expertise, our idea, whatever it is that we're doing is of value. And it's an exchange for, funds that are coming through, and really taking time to ask hard questions. We've heard this, as advice from our mentors for our own startup, as, when you're talking to a funder, don't just say, oh my gosh, thank you for the money, goodbye. Ask the hard questions, challenge what you hear from them. See if what they're asking of you is worth your time and your commitment and your own investment. I think it's just a really valuable lesson that, applies across the board. So just another, that's my last one, I promise.
No, that's great. And, Ibrahim, you've worked in private equity, and you've, I'm sure, seen that same dynamic of, PE firms investing on more of that level playing field. Just curious if there's any final parallel connections from that space that you see to what Madeline just mentioned.
There's definitely been a common trend of these impact type funds launching. I don't know how many times I've checked LinkedIn in the past few weeks where I see another, VC firm or private equity fund launching their own impact fund. And I think, I might be wrong, but I think SoftBank just launched another funding round for their impact fund. And I think it's good to see that there's still a lot of focus on bringing that to become a normalized area of focus for these larger players in the investment market. The only thing that I'm uncertain of at this point is where is that money being put forth? And like you said earlier, Puya, all these different companies operate differently. They have different requirements. They want to meet different goals they're hoping to achieve. And I think it's going to be interesting to see over the next few years how those impact funds are used. And it's going to be interesting as well to see where the shift to collaboration starts coming in, where is it going to be, cause specific, or are they trying to just help overall? Maybe some firms or some impact funds kind of focus on, 2-3 niche areas. But that's perfectly fine as long as, impact's being made. But I'm curious to see, the whole purpose of, a big chunk of Match Nice is trying to promote, collaboration among nonprofits. And it's going to be interesting to see how that kind of pushes into collaboration between these range of impact funds that are going to be supporting this range of causes over the next few years.
Well, Vivienne spoke to it, Dom spoke to it, we're speaking to it, this shift in investment into the impact space. What I'm really hopeful for in the future is that we're moving away from this green certified label that just looks good on the public facing packaging of what we're doing, and actually focusing on the impact and the outcomes, and really putting like our, what's that saying? Like putting our money where our mouth is, kind of thing. Yeah. Well, Madeline, Ibrahim, it's great having you guys on the show again. Thanks for the great debrief and conversation, and we'll catch you on the next episode. Episode 10 is coming up right around the corner. That's a wrap. Another episode in the books. Thanks for tuning in. I hope you learned something new. As always, I will end on a quote, this one from Denzel Washington. He said, "At the end, it's not about what you have or even what you've accomplished. It's about who you've lifted up, who you've made better. It's about what you've given back." Thanks for tuning in. Don't forget to hit like and subscribe. Give us a rating on Spotify, Apple, wherever you're watching or listening to this. It means a lot to us, and I hope you have a blessed day.